It's episode 3 already of the retail inventory method. But before we start this video lecture, let's have a recap on where we are already based on these questions. So again, these particular questions should be answered to master the retail inventory method. So let's start with question number 1. What is really the goal of the retail inventory method? I believe that we have already answered this in the past episode. Actually, we already know that the retail inventory method is used to convert ending inventory at retail to estimated ending inventory at cost. And aside from that, we already know also that the retail inventory method is only applicable to businesses who have a lot of products or variety of products. So basically, what I'm saying is we are already finished with this first question. So let's put a smiley here. So how about question number 2? How to get the ending inventory at retail? So far, what we have discussed is that in order to get this ending inventory at retail, we have to get the total goods available for sale at retail or tigas at retail, which is why we got up to here. So, we used the tigas at cost format as a stepping stone to compute the tigas at retail. And we concluded that most of the elements here in the tigas at cost will just be added with markup, and then we will have the selling price or the retail prices. But with the exception of the freight in and the purchase discount, because again, it is impossible and illogical to put markup on them. But aside from these elements here, net markups must be added and the net markdowns must be deducted also to get the tigas at retail. Unfortunately, although we know that the net markups is just markup minus markup cancellations, and this markdown is just a summary of markdowns and markdown cancellations, we still don't know the concepts of these four. That is why we have this illustrative situation, right? So let's use this illustration to learn about the concepts of these four: the markup, markup cancellations, markdown, markdown cancellations, after this short intro. So this is again the illustration. We have product X44, which has a cost of 10 each, and this product was first sold at 15 each. So again, it has a markup of 5 each. And actually, this 15 right here is the original retail price, and the 5 is the original markup. Okay? Just remember that. So, to start the analysis, let's put 15 here in the middle. Don't worry, it will make sense later. Now, the selling price was revised to 25 according to the illustration. So let's put here 25. So from 15 to 25, there is an increase of 10. So this is what do we call the markup. Because the markup is the difference between the original retail price versus the new higher price. So that's the markup. It's as easy as that. Now, let's move forward. According to the illustration again, the price was revised again to 13. So there is a decrease of 12, which is 25 minus 13. But the twist is, you cannot declare the whole 12 as a markdown immediately. Why? Because you still need to cancel this previous markup of 10. So, on the decrease of 12, 10 is what do we call as markup cancellation. Okay? And the remaining decrease of 2 is the markdown. I hope you can still follow. Now, let's go back here. The last revision of price is 17. Now, there is an increase of 4. That's from 13 to to 17. Now, again, that 4 cannot be considered markup immediately as a whole. We still need to cancel this markdown. So, in the increase, 2 will be considered as markdown cancellation, and only 2 will be considered as markup. Okay? So, that's the concept of markup, markup cancellation, markdown, and markdown cancellation. But before we go back to the tigas at retail computation, please remember this. If there is an increase in price, they are not considered markup immediately because they can be a markdown cancellation, just like this one. And if the price decrease, be careful because it is not a markdown immediately, it can be a markup cancellation, just like this one. So that's it. Now, let's go back to this. So, since we are considering a lot of products or variety of products, then expect that some of those products have markups and some have markup cancellations and some might have markdowns and the others might have markdown cancellations. So, these two right here are just the summary for all the products. So these net markups here are the markups minus markup cancellations of all the products of the company. And these net markdowns are markdowns minus markdown cancellations for all the products of the company. And since you already know the concepts of all of this, you can already summarize all of this to get the tigas at retail. And so, let's go back here and put a small smiley here because we already finished computing the tigas at retail. And that's it. Now, the last step to answer this question is already getting the ending inventory at retail amounts. So, let's go back to this tigas at retail computation. So, here it is. But let's focus on the second column. Just ignore the first column. So we have here again the tigas at retail. Actually guys, you only need to deduct one thing, which is the net sales, and then you will already get the ending inventory at retail. So if you use logic, tigas at retail are the total goods that the company can sell, right? And since it's tigas at retail, meaning this is already at selling prices. Now, you want to get the remaining inventory amount because normally not all of these tigas will be sold, right? So what will you do? So if this is the available for sale for the year, then deduct all that was sold during the year. And then you're going to get the remainder or the ending inventory at retail. Okay? However, this net sales has components and we still need to study them all one by one. So, the first component of the net sales is the gross sales. No need to elaborate that, right? And the second one is that you need to deduct the sales returns and allowances. So, still no need to explain that also. And then we have the sales discounts. So, the sales discounts are supposedly deducted the same with the sales returns and allowances. But there is a twist here. So, actually, this is not to be deducted and this will be ignored. So this is always the case when we talk about inventory estimation. Again, the sales discounts are normally deducted from the gross sales. But if we're talking about inventory estimation, this should be ignored. Now guys, I'll tell you, retail inventory method, which is our topic, is a method of estimating inventories. That is why we should ignore this sales discount. The question is why? Because, first reason, the sales discount does not reflect physical flow of units of inventory, unlike the sales, where actual units of goods are given away to customers, meaning there is an outflow of physical inventory when we are talking about sales. And the sales returns, where there are actual units of inventories which will be received by the company from the customers. So there is an inflow of physical units of inventory. Again, sales discount do not result to inflow nor outflow of physical units. That is why it needs to be ignored. The second reason is that if you deduct the sales discount, you will arrive at a wrong ending inventory amounts estimated. And I will prove that through an illustration on the next video to keep this video short. So, if you learned, please click like, subscribe, and hit the notification bell to be updated on my next videos. Thank you for watching and see you on the next one.